The following is a presentation of TFNN. Live at TFNN, The Money Masters.
Let's go to Carlos in California. Hey, Carlos, what's going on?
I want to thank you guys for all that you do for TFNN. I've been a Tiger for over 10 years. Actually, I started listening to you before I even speak a word of English.
Oh, really?
And the thing that captivated me was when you make like, rawr. I was like, wow, what is that?
That is so cool. And where are you from?
Take it serious. I'm from the south, actually the northwest part of Mexico.
I love
right
it.
next to Guayabitos.
Okay.
It's close to Puerto Vallarta.
Okay, cool.
Yes, and I listen from there, and then when I arrived here, I married my wife, and then I keep listening to your radio station.
That's a beautiful thing, man.
It's such a great thing.
Now, your Money Masters, Tom O'Brien and Steve Rhodes.
Good morning, folks. Half of the Money Masters are here. Tom can't join us this morning, but he is here with us in spirit. And let's go take a tour around the markets right now. You got the Dow trading up 112 points. S&P's down 14, trading out at 1302. The composite down 29 points. That's trading out at 2787. If we take a look inside the Dow 30, you've got two stocks trading up. Apple. Yet the fund managers look like they are buying Apple today. We'll go take a look, see if there's any volume at all behind that move. Apple trading up $1.12 right now. You got Verizon up 14 cents. Other than that, in the Dow, you've got everything is negative. If we take a look at the S&P, it looks like I've got the top 20 or so in the S&P, top 25 or so. Only thing I see there that is green is still Verizon. Go over to the banking sector. In the banking sector, the top 20 or so, I don't have anything positive there, anything green. And what I've got up on my screen here right now, folks, is I've got the S&P cash, the SPX, if you will, and what you're taking a look at here. So hopefully you're watching this on Tiger TV. You know, if not, just simply go over to the homepage of TFNN.com. Two ways to watch us on Tiger TV. You can click on the tab. You can watch the show live, stream it right there to your computer. Better yet, go over on the right-hand side. You'll see a little area, a little button area that says click there to download. You can put the app on your device, on your mobile phone, if you will, your Apple device, whether it's an iPad, a phone, or Android device, and you'll be able to watch live streaming video live, if you will, and we want to be able to show you the charts on your screen. We want to be able to help you to understand, you know, maybe just some areas of support or resistance, what the markets are doing, so that you can go ahead and interpret. And we take a look at here, you know, I've been showing this chart here on and off, whether you watch the opening show that I do from 9 to 10 each day, the Trader's Edge show, and one of the things that we took a look at last week on Friday was we took a look at this descending tops area. The descending tops, this is the daily chart on the S&P, and it was going back to the high that was made, the all-time high, if you will, going back to October 10th of 2007 when you had the SPX trading out at 50 high, actually got up to 1565.42. And if you just simply go from the top of that swing point, and what I also want to be able to show you here, folks, I want to be able to show you this is where the 50-day exponential moving average is crossing through the 200-day exponential moving average. I prefer to use exponential versus simple. I don't like anything simple in life, folks. And so in this case here, you can see when you make that crossover, I call that the death cross. Some folks use the simple moving average. In this case here, you can see once you crossed over that, you should have been looking for trades on the south side of the trade to the downside. You can see here that you just simply made them move. Now, in this case here, because these are lagging indicators, so I prefer to trade leading indicators, you know, but still be aware of what's out there. What's a leading indicator? Well, when you're taking a look at this S&P chart here, the leading indicator was coming into March of 2009. You made a nice butterfly pattern, just a little bit over a 1.272 butterfly pattern. You had some really nice astro aspects taking place right there. And you can see how the leading indicator, using butterflies and Gartley patterns, if you will, as a leading indicator would have gotten you into the trade much, much earlier. In this case here, and I certainly remember that. I remember that weekend, if you will, having been 100% long after the market was just continuing to do nothing but move to the downside, if you will. And so there's fear. There's always fear. But the beautiful thing about fear, folks, it's false evidence appearing real. And when you have stops in place, when you use that 1% rule, which I can teach you to do, folks, if you're not familiar with that, in fact, you can go over to Channel 5, one of the great Tiger TV channels, because we got an archive of great events out there. You can watch, I think there's Understanding Probability. Just Google that, or go over to YouTube and Google Understanding Probability TFNN. There's a great little one. I think it's 30-minute or 60-minute webinar that I did there, absolutely free. You want to be able to pick up the information there, or you can go over to the homepage of TFNN, and in the carousel you'll see position sizing tool. Position sizing tool is something you want to be able to have in your trading arsenal. Why? Because it helps you identify exactly how many shares of something you should buy or sell, depending on whether you're going long or short the market. More importantly, folks, it'll tell you what the average daily noise is. I call that the average true range. I take a look back at the last 10 sessions and average it out, and that's just the daily noise. If you've ever been stopped out of a trade too early, you were right on the trade, you just simply got stopped out, your stop was too tight, it's because your trade was within inside the average daily noise. So you don't want to do that. Use that tool that I've got out here. You can see how the 50-day crosses over now, crosses over the 200. It did that right in the August of 09 time frame. Of course, you would have missed out on 5 months worth of great trading. But once it crossed over, that was suggesting that you should be on the northern side, if you will, of trading, the long side of the marketplace. Let's go back to that descending top line. You can see that coming down from here. Let's go ahead and move over. And what did we do last week? Well, first, that descending top line came and it touched May 2nd. May 2nd, 2011 is when we had made our next high. So I just simply have a line going down from the top of October 2007 to that May 2nd area. And now we blow this up a bit. And what do we have? We got a beautiful thing. We got patterns that are set up here. You've got that descending tops coming in. You can see how all that the S&P did was it just went up and tested that area. But what else did you do? You had, folks, you had another leading indicator pattern, just like we took a look at the butterfly on the downside in that March time frame. Here on the upside, you've got a Gartley sell pattern. In this case, it's really beautiful. It's more than a 0.786 retracement coming off of the May 2nd high. That's fine. In fact, it's 84% retracement. But what you also have, we've been taking a look at October 27th as being a key area. October 27th, the high there on the SPX is 1292.66. I should have that ingrained. You know, it should be tattooed, if you will, right on my forehead. 1292.66. You're trading out at 1384. That's going to be an area of support for you. When you break through that, folks, that's saying lower prices coming. Well, what else is below that area? Well, you can see I've got this upper trend line here, just simply, and this is a real junior trend line, if you will, coming off of the lows here from December 28th. You know, we probably can use Basil's 9-period EMA. It probably walks that same line, if you will. But here, just simply wanted to be able to easily show you. You can see this red trend line. You can see how the S&P cash right now is trading right down at that area. When you break through there, where are you headed to? Well, you're going to likely head to this trend line right here, which is from the area going back to October 4th. You know that October 4th area is important for us. And I'm just simply, just like I did on the descending tops, if you will, creating this triangle that's out there, this little wedge. And so October 4th, we go to the lows there, all the way up to that November 25th area. That's the next point, if you will, on this map here. And so what else do you have along that line? Well, look what you've got. You've got Mr. 0.382 sticking out. That is one of the retracement, one of the beautiful Fibonacci numbers, retracement levels that you want to have in your arsenal. 0.382, 618, 786. And this is just simply the 0.382 area coming off of that November 28th, November 25th area. That would be right here in the 12, looks like about 1256. And right there in the 1256 area, you can see you be coming right up against this trend line. So you break through here. then your next area is going to be that point 382. We would have told you that anyways, but you want to go ahead and use these trend lines as well because they'll give you an indication of an area of support or resistance. That is on the S&P right now. Again, trading down 15, down at 1301. If we go take a look at the other indexes out there, folks, let's go see what we have. See what other patterns there might be for you to take a look at. Well, how about the NDX? The NDX, and why we going to take a look at the NDX, you've got Apple trading up $1.84 right now. And if you listen to the first hour, you know, we took a spin around the world. We were looking at Asia, so we were taking a look at the candle patterns that were out there. We were taking a look at the currencies, because it's important to understand what's going on in the currency market, just simply because of the correlation between King Dollar, which right now is trading up 44 cents, 42 cents, King Dollar, and the direction of the U.S. markets. And when we take a look at the NDX 100, which is, you know, has been the strongest index out there, what you can see, the NDX 100 gave us a real clear signal here on January 26th, a clear signal up at the highs, and the signal there, folks, was a bearish engulfing candle. That suggested that the NDX wanted to move lower. Where could the NDX move to? Well, the first area here is going to be that point 382. Point 382 is 2376, folks, and where it's most likely going to come down to, assuming that this is just the beginning. This is just the beginning of the retracement. This is, you know, for it to pull back to this this trend line here, you know, depending on where it pulls back to, probably pull back into this 0.618 area, which is 2312 or so. Nothing actually wrong. Nothing wrong with a pullback. This is nothing more than a breathing pattern, but, you know, if you don't have stops in place, if you don't pay yourself, and you just simply ride it up and down, you know, that can be anguishing, if you will. You got to learn how to pay yourself. You know, one of the things that I was doing last Wednesday was I was teaching people how to get to their dream client. I was really teaching you how to get past the gatekeeper, because you see, folks, in life, there's only one person that stands between you and your dreams. When it comes to business, usually your dreams should be your dream clients, those folks that can absolutely change your world. And you ought to have a list of like 100. You ought to have a list of 100. Why 100? Because when you start utilizing the tools that I teach you, how to get past the gatekeeper, when I teach you how to provide an irresistible offer so that when you get your dream client on the phone, when you get that CEO that could change your life, that you're able to, in 2.5 minutes or 3 minutes, whatever that time frame is, you're able to capture that person's attention, and you're able to get that. You know, I've been teaching that. I started teaching the folks the techniques. If you'd like to see that webcast, all you have to do is go over, sign up for my newsletter. You can have that for 30 days, unconditional money back guarantee. So, you know, when you take a look at actually what's always interesting, what I find interesting, is that oftentimes people aren't willing to make investments in themselves, which is, I just shake my head. If you're really trying to get from where you're at to where it is you want to go, you have to make investments in yourself. You know, following this show, you got Basil Chapman. I can guarantee you, Basil could come on and he could tell you what investments he's made in himself during the last 30 days, whether it's a book, whether it's going and listening to a webcast or what have you. You see, Tom does the same thing. I know it is. I know he does it because we exchange books back and forth. I know there's other education. I know Larry does. Larry does it each and every day. He opens up Mark Douglas's book. I prefer to open up Larry's book, though, because Larry's book, you know, it's not what it's what is it? It's not what you think, it's how you think. Also his diary, the diary that he's got, that's absolutely a fabulous book. Well, time absolutely flies here, folks. You know, and you can't stop time. And it's time for you to take action, folks, massive action. We'll be right back. We will go take a look at the markets, 877-927-6648. We'll be right back, folks.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective and maximize your returns. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. 877-927-6648. You got the Dow trading down 106 points right now out at 12,554. S&P down 13. Composite down 27. And let's go to our first co-host. Let's go to Rick in British Columbia. Rick, thanks for calling. Thanks for holding.
Hey, how you doing?
I'm doing great. How about yourself?
I'm sitting here in the hospital right now. I don't have a screen in front of me.
Oh, man. How's your dad doing?
He's doing good. He's stabilized. And actually what I was going to say was there was a caller about a week or two ago asking for a white light, and I'm trying to remember who it was for, whether it was for his father or whatever. I would just be nice if he'd give us a call and give us a little update.
Yeah, okay. Well, we're going to send right now to you. You should see the den. It's lit up like a Christmas tree. You should be you and your dad should be getting blasts right now. I love it.
Yeah. You know, well, first of all, I mentioned to you last week, Tuesday or Wednesday, about the Bradley model being Saturday.
Yes, you did. Yep.
And so far, it's going in the right direction, but things can change. I just thought I'd mention that.
Yes. Well, you got the Bradley. You've got the today you've got the lunar phase apogee which is, has been also working pretty well. You got the patterns that were lining up, with regard to expansions. Even, GE's got a 1.618 and a 786, pattern. So it's up against some fairly good resistance areas. So, it's really all out there. What I think is so cool is that we've got everything is lined up so that, when you take a look at the patterns in the general indexes, and these butterfly patterns, they work 70% of the time. So we're at this inflection point where if it doesn't work, meaning that they fail, and price were to move up to the upside, that gives you such great information. You know what I mean, Rick?
Oh, yeah.
It
does.
Yeah. So this is what you live. Go ahead.
I'm going to ask about GE, but if you look at the SPYs,
yeah,
you see that low down there. I think it's a bit of a swing low at 128.
Give me a second here, and I'll pull that up for you here. So got the SPYs, okay, and you're looking for what area now? What you're talking about, like the January?
There's a swing low of about, like I said, I'm not looking at the screen, but there's a swing low down there of about 7 or 8 days ago.
Yes.
Around 128 or a hair under or something like that?
Well, what you really, what I'd be taking a look at actually is really just the October 27th, swing point, which has got 389 million shares, and the high on that is 129.42. And that's really the next area. That's the area. That's had been the area of resistance, which we went through on lighter volume. That now becomes an area of support.
Yeah. But if you look at GE and you put it on a weekly, even a daily, you can see that it's got 17 written all over it. I mean, it's a false break on volume there.
Yes.
We can flutter around. We can, go down, bounce back to 19, and GE used to be a bellwether, and then for a long time it wasn't.
Yes.
But I think it's slowly coming back to being one again. Now, because the earnings is out, and if stocks follow each other like geese,
yes.
You know what I mean?
I do.
It goes down.
I do.
And if GE just follows the market, could potentially be a little bit of a bellwether again, because it has gained a little bit of strength, over the last little while.
It has.
And because it's in financials, it's, who knows? It makes Jet this, and I don't know if it makes Jet Motors. I think it does, but it does so much, right?
Yeah, it does. It does.
And it can be a real reflection of the economy or a reflection of the market itself. So, but do you agree, though, that at some point in time it's got 17 written all over?
Oh, it does. In fact, I've got the chart up on my screen. One of my clients, is in GE, and I had done a review of the chart for him. And what we were taking a look at was as it was coming in, you say the false break topside when it was coming into its highs on the January, within the past couple of days, if you will. Number one, it was coming into a swing point from July 22nd that had 82 million shares. It was coming in there came in there with some decent volume. Came in with 92 million on January 20th. So, when you talk about, so it's coming to that swing point with volume. It still rejected it. Right now we're trading down. You gapped down this morning. But what you also had prior to that was you had a couple of bearish engulfing candles that were suggesting to me that we were, at or near a high just simply for this run. You had a 1.618 expansion off of October 27th. And the $17 area that you're talking about, that is the high of October 27th, 17.50. So in my opinion, that would be a normal area for GE to retrace down to. And if you just simply take a look at the retracement from the swing, its last swing down there, you're really at a 0.382 retracement. That would be nothing. For GE to come down at $17, test that on lighter volume, that would be pretty strong for GE and for the market.
Exactly. And here's another one.
Hey,
and then
stay tuned. Stay with us here for a minute, Rick. We'll be right back in just a few minutes. 877-927-6648. We'll be right back, folks.
Hi, folks. This is Tom O'Brien. If you want to get great trade setups in equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in the complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com under newsletter. Hit the Market Insight tab for your 2-week free test drive right here, right now.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes a carefully selected portfolio can lower your volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angelo O'Brien, financial advisor and certified financial planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. 877-927-6648. Dow's off 106. S&P is down 13. We're on the line with Rick from British Columbia. He sent his Canadian geese down here, folks, and they're delivering Molson Goldens and Labatt's all over to stores down here. That's a great beer. I love those two beers. I do. You know, go ahead.
Just to change the topic here, I guess somebody made a rap song for Newt Gingrich. I think we got to have a contest for the Tiger and Tigresses to see who can make the best rap song for Tom and you and TFNN then.
Oh, man, I don't know rap. I'd have to get my head wrapped around that one. But, hey, I will put it out there. You know, absolutely. So Rick just put out the challenge, and, you know, the folks that whoever can put together the best rap song, then what we'll do is we'll get them a case of, you know, some Canadian beer. How's that? Some good Canadian beer. And they still make Brador. Is that a beer still sold in Canada, you know?
Which one's that?
Called Brador. I think it was made by Molson. But it's a Long time ago. Now I'm going back, who knows, 30 or 40 years.
Up in Quebec, we have an area called Labrador.
Oh, okay.
Which is part of Quebec and Newfoundland up in the northeast.
Yeah.
But so when you said Brador, I wasn't sure.
No, it's not the same.
I haven't seen it. I'm off the West Coast. So.
Not the same. Not the same. Now we're talking, folks. We're talking about GE with Rick, and one of the things that first GE's got to do, Rick, is got to punch through that high volume day that it's really trying to attack right now, which is January 20th, and the low there is 1868, and you did 92 million shares that day. Right now, looks like GE is going to trade somewhere between 60 and 70 million shares, but one of the other things that really sticks out on GE is a high volume day from December the 12th, where he did 180 million shares, and the high on that 1686. So that's that same 17 area, that really you're talking about.
Exactly.
And if GE goes down there, there's nothing wrong with it. In fact, you'd want it to go down there, test on lighter volume, and could be making an ABC up if it pulls back on light volume.
Like Tom said, and we can use that as a rap song line is. The real price is where we're going.
I love it.
The real price, the high volume day. But hey, one quick thing. Another one is McDonald's, and I'm going to sign off on that one, which has been probably the best stock, one of the best anyway.
Yeah.
And it's got 90 written all over it, which is another $8 lower or whatever. And I'm gonna let you go after this.
Sounds great.
Thanks a lot, man.
Our best to your father for you. Okay.
You betcha, man. Thanks, man.
Absolutely. Rick's talking about McDonald's. Now, if we take a look at McDonald's, folks, it's making an ABC up. Let's see and where I'm going with that is really just an ABC within the larger pattern here. But that B point, what I was looking at, is from November the 8th, did 7 million shares, and you gapped up into that B point, which is important. That was your second gap during your C to D leg. When you gapped up here, you gapped up with 7.6 million. That was coming into the swing point that had 7.1 million. So you had volume coming into it. You closed over it. That was confirming you had an A to B equals C to D. That will eventually take McDonald's up to 102.93. Now, you can argue that ABC completed, if you will, on January the 20th when it got up to 102.22. I'm not going to, we're not going to cry over 70 cents out here. So let's go to Tom in Boston. Tom, thanks for calling. Thanks for holding. How you doing today? Tom, you there? Tom is not there. Okay. Well, Tom dropped off the line. He wanted to take a look at TZA, so we'll go ahead and we'll do that for Tom. But what we would first do is let's go over and take a look at the IWM, because if you're going to trade the triples or the doubles, what you really want to do is you want to take a look at the underlying index off of that, because it's just going to give you better information. It's traded longer, and so in trading the small caps, what you want to look at is the IWM. So that's what it is. I'm going to pop up on my screen here right now. And the IWM, the beauty about this is, let's see if there's actually two patterns out here. I don't think it made the 0.618 retracement. And what I've talked about there, folks, is going back to the swing point on July 7th all the way down to the low from October the 4th. Oh, my goodness, it did. You got to love this. Beautiful. So what the small caps, here's just to give you an idea of the type of resistance that the market is up against. And, when I was speaking with Rick, what we were talking about is that the coolest thing about where we're at in the markets right now is there's going to be so much information released to us. And what I mean by that, you take a look at the small caps, there's actually two patterns that have completed in the same general area. Two patterns that would give you a 70+% chance of seeing a change in trend. The first pattern is the one that you see up on my screen here, which is the butterfly pattern, which is a smaller pattern with inside a larger pattern, which I'm going to draw for you. That smaller pattern, we're going off of that October 27th area. 1.272 butterfly, it's a nice looking butterfly out there. The right wing looks a little bit, not as pretty as that left side of the wing, if you will. But what you also have, and this is a butterfly cell pattern, but what you also have here is you have a Gartley cell pattern starting from July the 7th coming all the way down to October the 4th. And you can see that I'm going to just go ahead and complete that in here. We'll just paint that a different color. There we got the light blues going. We got the purple, if you will, bright purple for my daughter Shay. Happy birthday. That's her favorite color. That might not be her favorite purple, but she probably doesn't mind any purple, if you will. So what you've got here is you've got a 786, which is really nice. You know, the patterns you like to be able to trade are .786 Gartley patterns. Why? Because here's the deal. If those areas don't hold, not only will you do a move of a move, which means go back to your X point. In this case here, you'll be looking at July the 8th. What you'll do is you'll turn this into a butterfly to the upside. And a butterfly to the upside on the small caps, if this area doesn't hold, this says that the small caps would want to trade all the way up to 93.01. That's after first stopping at 85.97. But you got two patterns that are coming into place right now. We got King Dollar on the move. You got the euro that's trading down. We got the directional things in place here. And the question really is just how deep of a pullback do we have here? But you know what is beautiful here? I'm going to, how about that? What did I do in there? Let me just delete that guy. And what we have is we've got two patterns that have taken place here on the small caps. Now, really nothing that to indicate anything to us just yet, because today's volume, you've got 15 million. We are an hour and 10 minutes into the trading session. So if I was going to just do math on that, I'd say we're about 90 million shares today. At the highs, 2 sessions ago, you did 52 million. Okay, well, we're coming off the highs with some volume there. Now, what we're really going to be taking a look at is that October 27th area. October 27th, the high on that swing point, 76.97. That is going to be your first area of resistance. And that had 129 million shares. So you're going to need more than 129 million shares as you're coming into it to truly bust through there, because right now that is going to be your first line of resistance. You bust through there, then folks, the next logical spot for you to go to, and that's why you want to have volume candles on your chart. You just take a look at within inside this entire move. At least that's what I like to do. Take a look at it just simply within inside this butterfly pattern and see where are your high volume bars that stick out. Well, you've got one here that is after October 27th. You have a high volume bar down, which was a swing point on November the 1st. You had 110 million shares. Well, the top of that is 72.97. Well, what do you have at 72.97? Well, let's just simply go take a look at our retracement rule from the November 25th low up to the high that it made 2 trading sessions ago. And at .618, what you would be looking at is 71.70. So 71.70, you would be trading almost near the bottom of that swing point, because the low on that is 70.96. So that, to me, is the next logical area, either the high or the low, for the IWM to trade to. And Tom in Boston, that's what I would be taking a look at. That is what I would be taking a look at, if you will, on the small caps. That's how I would trade the TZA. And somebody in the den has asked me about, is it a 1.272 expansion? It is a 1.272 expansion off of, I'm not sure which 1.272 you're talking about, but there is the 1.272 right now, that the butterfly pattern, that's off of October 27th, and the question might have been, if you bust a Gartley .786, will you do a 1.272 expansion of that? And the answer is yes, but you'll first do a move of a move. So let's continue just peeking around here. Let's see what we can see. Let's go take a look at I won't do it. I think I'll do it right this second. Let's go look at Apple, because if you take a look at what is moving inside the marketplace, and it is fun buying, I believe, starts today. You've got Apple is up $3.90. Now, the good news for folks is that if you are bullish, the NDX, which I say you got to be careful because of that bearish engulfing candle. Let's go ahead and pull up Apple. Is that Apple did not gap down this morning, because Apple is setting up another possible island reversal pattern. So let's go ahead and expand Apple out here, folks. We take a look at Apple. You can see Apple is trading out right now. Let's see, what is it? Trading out $3.96 up, trading out at $451.24. You know, you had Apple had that just explosive, incredible earnings, revenues, if you will. We got this nice gap here, and the volume ever since that session on January 25th, you haven't had much volume. On that day, you had volume. You had 34 million shares. The following session, though, you had 11 million shares. On Friday, you did 10.7 million shares. Today, so far, you've got 4.6 million. So you've got some volume coming in here. So if you're looking for a place where fund managers seem to be putting their dolares, not that that's a word, but putting their dollars, you can see that they're putting their dollars in Apple. Ooh, you got to be careful because of this gap out here, because I don't know that Apple has any unfilled gaps here as of late, and I'm talking the last several years, if it really has any unfilled gaps that are out there. And so you'd want to be real careful here. Now, the 1.272, you can see this was a 1.272 area. In fact, I have in here the bid of 458. That's when they came out with earnings, and they came out with earnings. They gapped up into that 1.272. And when you do gap up into the completion of a pattern, what that does tell you is there is likely higher prices to come. Now, so in Apple, if you do have the market being pushed up, if you do have it with fund buyers, that's where people are going to be putting their, when I say fund managers, putting the money that your companies are putting in for 401ks, your money, folks. If you're not managing your money and they're managing it for you, I can pretty much give you an idea of where it's going just by tracking volume. And so it would not be unusual, because we gapped up into this 1.272, for you to be able to see Apple up in the 465 area. Why do I say 465? Because that's the 1.618 off of this island reversal pattern, off of this swing point from October 17th down to the lows that Apple put in on November 25th, the day that we came back from Thanksgiving, if you will. The market came back just for a few hours. You traded just for a partial day, I think up until about 2 o'clock. 1 or 2 o'clock that day. So you can take a look at Apple trying to push up into this 465 area, but you got to be careful. Got to be careful, because Apple has had a tendency of doing these island reversals. Eventually the ship will get back there, but you don't want to be stranded. I don't think you want to be stranded on the island. It's not a fun place to be. Let's go take a look at some of the, let's go dig down into the sectors inside the spiders. And after we do that, I think there was a request in the den to take a look at the yen. I did that during the first hour. I'll come back to it, but you want to wait on the yen till we get down into an area where the Japanese finance minister stepped into the last time from an intervention area. Now, what I've got up on my screen here, let's go take a look at the weak link out there in the S&P, and that would be the financial sector. So let's see what we've got going on out here. The financial sector being the XLF, and you can see that what the XLF is doing, it's just simply attacking the October 27th swing point. High on that swing point is 1417. 232 million shares traded. Let's see, today you have gotten up to a price, it looks like, of 1418. What did I say? Was it 1417? So you've gotten up to 14, so you got 1 penny above that. Let's see, the type of volume. What type of volume do we have in here today? So what you've got in here today, you've got 10 million shares. So we've got almost an hour and a half, 10 million shares. You're probably looking at about 50, 60 million shares going into 232. That is not enough, folks, to bust through this area. So you're going to get the XLF, because it's gone 1 penny over that swing point. You want to watch how the XLF trades today. Now, what it's also got to do, the XLF, it needs to trade below the swing point from October 27, that low there of 1368. So until you trade below there, what the XLF hasn't really done is give you any kind of convincing information. The only piece of convincing information to be short the XLF is this bearish engulfing candle that was created on January 26th. So you can see here you engulfed only one trading session. Still important, it's the high of that candle that is going to be your resistance area, the high there of 1434. We did 84 million shares that day. Folks, you can give me a call, 877-927-6648. Stay tuned, because Mondays are absolutely incredible days around here. We got Basil Chapman. He is warming up in the on-deck circle. I think he's getting ready for spring training. And Larry Pesavento following that from 12 to 1. He's doing spring training over in Tucson as well. We got a baseball game going on, folks. We got the Dow is down 95, S&P's down 11. We'll be right back.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650, but you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
And very happy.
Well, I appreciate it. Now, Did you sell us jewelry or did you buy coins off us?
Yeah, I sold you jewelry.
Okay.
Yeah.
Awesome.
What we waited at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio. Therefore, we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider, David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks, and absolutely stay tuned. Like I say, we got a great lineup for you on Wednesday. I got Basil Chapman and Larry Pesavento, 3 to 4. You got David White, and today from 4 to 6, you're going to have Mr. Ken Shreve. So it's going to be a great day here at TFNN, and got a quick clarification here. We've got this great, folks, there's nothing like having your back covered, and at TFNN, we've got this wonderful family. We've got the Tigers Den. You should check it out because they're out there, covering my back. I couldn't see all the information because I was focused, and the information I was giving on the XLF, my chart was not being updated properly. The XLF right now trading out at 1393, and the volume that we have here on the XLF so so far. You've got 20 million shares have traded. So you've got, maybe you're looking at about 100 million shares or so. You still need more volume than that to bust through October 27th, the low there. Now, not that you can't bust through it on lighter volume. After all, we did it on the way up. But what you were also doing on the way up as you were gapping up, and gaps give you some sign of strength, if you will. And you gapped up the first time on the XLF. You did it December 30th when we came back on January 3rd. You gapped up again on from January the 9th to the January 10th trading session. You've got a third gap, if you will, that are out here on the XLF. That is from January 18th. The high there, 1394. The next trading session, the low there, was 1399. So, and that was not a three-gap play, folks, because your third gap needs to be larger in percentage and price than either of the first two gaps. So all that the XLF has actually done right now today is it has closed the gap. Again, the high was the most recent gap where you had 1394 was the high. You've traded down to 1388. So, if you take a look, a spin around all of the 9 sectors inside the S&P, they're all negative, if you will. Let's quickly go over to the yen, since there was a request in the den just simply to take a look at the yen. So the den and the yen, and I don't think that's going to be part of the TFNN Steve and Tom rap song, if you will, but it does rhyme, and I don't know if rhyming is a key part of rapping. I think that it is. But so if we're taking a look here, let's not get carried away, right? So let's take a look at the Japanese yen US dollar, and what you can see here is that it is traded down to the 0.786 retracement, and that is a retracement off of one candle. You don't see that too often, but we're talking about October 31st when they had the Japanese finance minister step in and weaken the yen, and that's what we all need to have happen, because it'll be cheaper goods for us, if you will, here in the United States, and it'll be better for the folks in Japan. But right now, if you just take a look at that one candle, October 31st, trick or treat, it was right now trading at 76.35 and at 76.35. That is the 0.786 retracement of that one candle. But what I would do is I would wait. If you're looking for a trade on this here, the better trade is moving all the way down to the 75.49 area as it gets close to that area, because the Japanese finance ministers have stepped in more than one time. I think this might be the third time, at least the third time when they have stepped in here. You can see the last two times it really has done nothing, if you will, and you got the yen is still getting stronger. So that is for the Japanese yen. If we just simply, I'm going to go over to the ETFs where I've got just simply the 5-minute charts up there. Let's see if there's anything that bounces out here at us that shows any kind of volume in these markets. That has been the problem on the way up. It has been the problem on the way down here. If you take a look at the Qs, of course, here the Qs, it's Apple. We know that Apple is pushing that up, trading up almost $5 right now. And folks, it's been great to be here with you. Have a great morning. Thanks for joining me. Stay tuned for Basil Chapman. I'll see you tomorrow morning, 9 a.m. sharp. Have a great day.